This iconic American giant has lost quarter of its market cap in this year alone. Let's explore in this video what is going on with Apple stock these days, why it is down lately, what the smart money is doing right now, and at the end my perspective if this is the right time to buy Apple or just wait and watch. Hi, my name is Sunny and I make content that affect a common man financially. So let's dive into today's topic, Apple at $135 a buy. If you're new to this channel, please subscribe to it alongside smashing that like button as that will help me with the YouTube algorithm, which of course will be highly appreciated. Apple has made lot of shareholders wealthier over the last decades, but recently the stock has been on path of shareholder destruction. On Friday, it went down to almost $132 a share while closing the day at $137 and some change. For the last 1 month, it is down over 15%. Now, if you see its performance year to date, it is down almost 24%, which is a huge number given its market cap. On the positive side of things, it is up over 8.25%, which is not bad. But if you go back 5 years, it has given a stellar performance as it has moved up almost 260%. The broad stock market recently has been all over the place. The reasons being Federal Reserve's decision to increase interest rates to slow down historic inflation, ongoing supply chain disruptions, and Russia's invasion of Ukraine. It was but natural that revenue as well as profitability forecast for such big tech companies might get affected, which explains why they are all struggling along with the broader stock market. In such uncertain times, investors pull out their money as they are trying to find refuge in safer assets away from growth and technology, hence the meltdown. Don't get me wrong, Apple has been delivering continuous strong financial results in spite of the challenging environment it operates in. But the fact remains human emotions behind investing take center stage, hence such stocks are dumped too in spite of their future prospects. If you cut through the noise, you will realize with the recent pullback, Apple's price to earning multiples have shrunk to 24, which are lowest since summer 2020 and in line with its 5-year historic average of 23. It being a free cash flow generating machine which has a huge business moat around its products, ask yourself what the smart money is doing. As an example, Warren Buffett owns about 911 million Apple shares whose value has gone down by $30 billion during this downtrend. Do you think he's selling? Definitely not. The smart money knows some of these factors alongside fear it creates in the stock market are a short-term phenomena, but it might create havoc in a small first-time investor's mind. When it comes to professional money managers or people with long-term investment horizon, they have a very different mindset and might conclude Apple's current valuations to be more in line with reality. Remember, markets often go from exuberance to extreme pessimism. Therefore, according to experts, we are not in that negative range yet, so some of them are just waiting in the wings. Apple today has a market cap of $2.2 trillion dollars with a revenue of $365 billion dollars that is up 36% year over year, having $94 billion dollars in net income which is up 64% year over year. Now, when you add market domination on top, the stock looks very tempting to me. In my humble opinion, it looks fairly valued on the basis of its price to earning as compared to its historic values. Now, does that mean it could not go down even further? I think there is a high probability it will. The reasons being negative sentiments and uncertainty in the stock market, where the Fed is increasing interest rates to tame the record high inflation. As a result, increasing interest rates depresses the valuation of growth and technology companies. Now, the $1 million question everybody is asking, is it the right time to buy? Here, I would like to state that I have started buying Apple, but definitely not all in yet. My simple logic is if it falls even more, I should have the financial resources to buy at lower prices, and if it goes up in value, I've already bought it cheaper. Just as a side note, when I invest in stock, it is always for long term. Therefore, nothing materially changes for me if it goes down by 50% tomorrow, or for that matter, it goes up by 100% next week. I hope it all makes sense as I'm just a random guy on YouTube with an opinion and not even a financial advisor. Please consult one before investing. If you have find value in the content that I make, please help me and my channel by liking, sharing and subscribing to it. Thanks for watching and see you in the next one.